Master your money, free your future. Welcome to Budget for Life. My name's Jeremy. I'm not a professional YouTuber. I'm a financial advisor, but this video is not financial advice. In this video, I want to talk about GameStop's profit margins, their gross margin percentage, highlight a couple trends to help you understand their margins a little bit deeper, and begin the conversation on my projections for their Q3 and Q4 operating income. Before I get into it, just want to say thank you to all the subscribers, the commenters, the viewers. Right now, there is an opportunity to be a part of the Halo Sub Club. All the way up until 25 subscribers. You're welcome to be a part of it. Also, thank you to the fans and friends of the channel who go the extra mile to support. All the earnings go to DRS Book GME shares. So I appreciate the support. Let's get into a couple things I want to highlight with their gross margin percentage because the reality is it's too simplistic to say, oh, GameStop made in Q1 of 2025, for example, 732 million on the top line, and their gross margin percentage is 34.5%. And then in the next quarter, they made 972 top line, and their gross margin's 29%. GameStop sells more than one product, and those different products have very different types of gross margins. So when we're thinking about their margins moving forward, you want to understand a little bit more granularly what are the margins derived from, and how can we look at that? So, for example, GameStop in their old 10Ks, so 2018 and prior, fiscal year 2018, they used to break down their margins on every one of their categories at the time. So in 2018, they made 8.5% margins on hardware, right? In 2017, 9.1%. In 2016, 11% on new hardware, I should say. And again, you can go into 2015 and 2014 as well. And then you have their total gross margin percentages that you can look at historically. So we know that GameStop is somewhat of a cyclical business in that they sell new hardware and new software, aka new video games, but they don't control when those consoles are made, right? When they're produced. And so understanding their total gross margin, one thing you want to do off the jump is understand what percentage of their total revenue came from new hardware and new software, because GameStop's ability to move the needle on those margins is probably relatively limited. Now, in 2016, they were at 11% on new hardware, new consoles. In 2018, they were down to 8.5%. I think that tells you a couple things. One thing it tells you is that the margins increase slightly on new consoles the later that you are in the console cycle. So in 2016, right, you are in basically year three of no new consoles, right? You have this console cycle in 2013 and 2012 with the Wii U, PS4, Xbox One. And then you've got 2014, 2015, and basically 2016 with no new consoles. So all of those years, 14, 15, 16, hypothetically, GameStop is able to sell these consoles for a slightly higher margin because every year that goes on with these consoles, the more that's being produced. And so the producers are able to lower their production costs, which means maybe there's a little bit more margin to go around for GameStop, the retailer, as well. So one takeaway here is the later that you are in a hardware console cycle, potentially the higher type of margins you can get, maybe as high as 11%, right? And the closer you are, or the newer that you are in a cycle, maybe the more compressed that those hardware margins get. Also, because you're trying to pay as much as you can to the manufacturer to get as many units as you can, because you know you'll be able to sell as many units as you can get your hands on in those earlier months, right? The other takeaway from this trend that I want to show you, right? 2016 to 2018, this slight gross margin compression for 3 years in a row. is that the margins on Nintendo consoles are likely slimmer than the margins on Sony and Xbox consoles. Nintendo is notorious for selling their consoles at break even rates, particularly the earlier portion of their cycle, and making the majority of their money on video game sales. And so, again, some of that compression, you could say, might be related to, well, in 2017, the Switch came out. And not only is the Switch a brand new console that GameStop might be paying a higher portion for, but also the portion of GameStop's total hardware sales in 2017 and 2018. Look, you see a almost $400 million bump in these um, years following 2016, and that $400 million bump each year likely related to, hey, in 2017, the Nintendo Switch came out. And by the way, there was nothing new in 2018 either. So that 400 million per year of revenue is basically new Nintendo Switch sales, right? And you know that they're new sales because they split, right, the pre-owned software sales um, out differently. So in 2016, they had 2.2 billion in pre-owned, and actually in 2017 and 2018, those pre-owned numbers came down. Now that's software and consoles put together, but to say that a new console cycle stimulates the used business, I don't know if we know that for sure, because at least in this, the most recent console cycle that we have this data broken down from GameStop for, the used portion of their business decreased as a percentage of their net sales pretty dramatically during that ramp of the Nintendo Switch um, release. Okay, let's start talking about implications here on the margins. Okay, when you're talking about GameStop's total sales, well, guess what? In Q1 of 2025, this is the latest stage of the prior console cycle, right? We had the obviously the Switch in 2017, and then the PS5 and Xbox XS in 2020. And we basically have not had a major console since 2020. So Q1 of 2025 is most similar to GameStop's full year of 2016, right? When they just finished this 3 year window of basically no new cycles, right? 14, 15, and 16. Well, GameStop just finished this 2021, 2022, 2023, 2024, right? A 4 year window of no new cycles. So it's no wonder, again, that GameStop's total top line was struggling. It's not just they're reducing their store count and shrinking their footprint. It's also there have been no new consoles to sell, and that's 50% of their revenue is console sales, right? So they can only sell what they can sell. Um, okay, so this Q1, similar to 2016, and in the fiscal year of 2016, their total gross profit percentage was 31.5% or 31.4%. That was their gross margin percentage right here. So GameStop at 34.52% has improved their gross margin by about 10%. I mean, what's the actual difference there? If we were to take 34.52, let's go ahead and see it, minus 31.4, it's 3.12 divided by 31.4. Yeah, right at a 10, like a 9.9% improvement in gross margin percentage, like for like, right? 2020, the very end of 2024 slash beginning of 2025 is the most similar stage of the console cycle to where GameStop was at in 2016. And so their total margins have improved by about 10%. What do we think that means? Do we think that their new hardware and new software margins have meaningfully increased? I don't think so. I think the reality is that a higher portion of their software is coming from used, right? So fewer new software sales are happening from GameStop. Fewer people are buying physical than digital. So with that total um, top line of software coming down, the margins of software is actually going up because a higher portion of those software lines, a higher portion of that software line is coming from used software. What else does it mean? It means that their collectibles margin is probably increasing as well, and maybe even their pre-owned, right? It's possible, but they're probably still in that 40 to 46% range on the pre-owned. And again, the new hardware, if anything, that's maybe come down since then. But if you were to take it all together and say, kind of like base case before the console cycle refreshed, right? Just kind of their core business as it stood, you could say that, okay, they had a 34.5% margin on where they were so far. And so, how do you get to in Q2 of 2025? They're now at a 29.12% margin. Well, let's think about these numbers here and what are the differences within these different lines. So, software came down from 175 to 152. And what are the margins that they're getting on their software? Again, it used to be that, some portion of it was pre-owned, some portion of it was new. That's still the case, obviously, but if anything, this is probably 35% total margin on the software. So this $23 million decline in top line, if they're making a 35% gross margin on their software, which it really might be more like 40% because this includes used as well. Well, if you were to take that number times zero point 0.4, that is a $9.2 million decline in this total gross profit number. So if you're to take that 252.8 to 52.8, that's Q1. And now let's make these adjustments, right? 252.8 plus AO14. Now you're expecting a 243 gross margin number in light of that decline. However, you also have, obviously, this hardware number that is much, much higher. But how much higher is this? It is $247 million higher. What is the difference between Q1 and Q2? What's the difference between this huge bump in hardware sales? Well, obviously, it's the Switch 2, right? So if we were to take that 247 difference and basically say that that difference is Switch 2 sales, and then if we were to say that they receive an 8.5% margin on their new hardware on that specific bump, right? That 247 bump. Well, you're talking about that 247 premium times a 0.085, right? 8.5% margin. And now you add that in, AO13. You're looking at 264, right? So we're just taking the base from Q1, and then what do we expect to be different based on the change quarter over quarter in each line item. The collectibles is the last line here, which what is the difference there? Collectibles went up by 15.83 million. And again, if they receive a 40% margin on their collectibles, which is probably more like 45, I don't know, but let's call it 40%. Well, that's a $6.3 million improvement in gross margin that you would expect if they receive an 8.5% margin on new hardware. And if all of that hardware bump is related to new hardware, right? Basically, what I'm trying to say is if you take $732 million of the 972 and ascribe it a 34.52% margin, and then you add in 40% on the additional software, or 40% on the software loss, 40% margin on the additional collectible gain, 8.5% margin on the new hardware. That gets you to 265, but the real number was 283. The real number was 283. So what does that mean? It means any combination of the new hardware, maybe now, even though it's a Nintendo Switch, even though it's a brand new console cycle, maybe they are getting more like a 10% margin, right? If they're getting a 10% margin on these new hardware sales, it could also mean that some portion of this increase, that 247, some of that is not related to the Switch. But look, guys, the pre-owned sales numbers came down once the new console started. So I don't think that this 247, I don't think it's aggressive to say that all of that is new Switch sales because the reality is the total number of used console sales probably declined from Q1 to Q2 if it reflects historically, right? So the only things that leads us to is, well, collectibles must be receiving even higher than a 40% margin, right? And maybe software isn't as high as a 40%, right? Maybe software is only altogether at a 30%, and maybe collectibles is all the way at a 50%. Well, that gets you to 270, right? And maybe the last, there's another $13 million of gross profit you still need to make up for. And maybe, again, some of that you could ascribe to, well, some of that bump in hardware has got to be used hardware sales or accessories, right? Let's check out accessories. So in 2016, they had $676 million worth of accessory sales, controllers and headsets, right? And that went up $110 million in that first year, and then another 170 million in the next year. Digital, how many people are buying Xbox Live passes, etc. That's a little bit of it. Okay, and these lines are now hidden within GameStop's hardware and software. The digital's hidden within GameStop software, and the accessories are hidden within GameStop's hardware. So that's the answer for the rest of it, right? Even if you want to say software is only 30% margins, collectibles is all the way at 50% margins, and the Switch is all the way at 10% margins, then basically what you have to do is say what portion of this 247 is actually accessory sales, and then what's the margin on those accessories? Well, back then it was 34, 32, 32. So again, if you were to take the 10% total improvement in their gross profit percentage from this cycle to that cycle to um, that ended in 2017, then you would say their accessories has about a 35% margin. So what portion of these sales do you have to call um, accessories to get this 270 number up to that 283 of what their gross profit actually was? Well, if this number just equal, let's see if we can figure it out. Rough estimate together. Oh, it doesn't make sense. Let's do equals AG 13 minus AE 13 minus AN 13 should be 0. And then if we call this 35% margins, and then we take this number, oh, we add in the collectibles. Okay, AO 15, AO 12. Okay, I'm moving software back up to 35%. Collectibles, I'm moving down to 45%. Hardware sales, we can keep that at 10%. But with the Switch, we know it's lower. I'm moving it down to 9%. So what does this, if this is only 227, 217, 210, 205. Okay, what do y'all think about this? This difference, this bump in hardware from 345 to 592, we're saying 205 of that is Switch, 42 of that is accessories. What would that mean? And that would give you a gross profit of 285. Oh, they were only at 283. Okay, great. So this is back at 210, 209, 207. I'm going the wrong way. Am I? 212, 213. Boom. Great. Now, what is the percentage of this 345 used versus new, accessories versus consoles? We don't know, and GameStop won't tell us, right? But you can derive looking at the gross margin numbers and looking at the historical gross margin numbers, you can have a pretty decent idea of what is changing quarter over quarter with the mix within their hardware sales and the mix within their software sales, and then how that projects into Q3. So we're looking at, I mean, what's 3411 divided by the total change of 247.11, 13.8%. So when we're looking at quarter over quarter, we could say that 13.8% of that additional $70 million, 13% of that's accessories, 87% of that is new Switch. Okay, so let's check it out. Are you going to copy over nicely for me? I doubt it. Oh, maybe you will if I go here. Will you? This is looking so sloppy, boys. They're not even all formula. Okay, great. $72 million difference. Okay, that's the gain from Q3 to Q4. And now here I want to take equals 13% of that number. And then now I want to net out that 13% minus AP12. You're not going to let me do that? Minus 9.48. And if we take those same margin numbers, per category. Sorry, this is looking so crazy, guys. Hopefully you're tracking with me. We're talking about, yeah, 247 improvement there, $52 million there. Okay, 9% profit margin on 63 million of incremental improvement in their hardware. We're talking about a gross margin that's increasing by another 5.7, 35% margin on approximately $8 million of this difference accredited to accessories is another $2 million of profit, 35% margins on the software improvement, $52 million software improvement quarter over quarter. We're talking about an additional 18 million of profit. And now we get to the collectibles because what we have here is Power Packs got introduced. And what portion of this 475 is Power Packs? Well, I think approximately 200 million of it is Power Packs. I think about 275 is the legacy collectibles business, and the rest is Power Packs. So that 200 additional didn't exist before, right? And what margin do you give the Power Packs? Conservatively, I'm going to say 10%. 16 times zero point 0.1. Now, if I were to take this and say minus AP 15, AP 16, 47 million of that collectibles is the legacy collectibles. So the improvement quarter over quarter, AQ 16. Is that accurate? 252 plus all those improvements. Okay, now we want to do 282. 282.93, right? So let's take Q2's gross profit, right? And then let's add in the incremental improvements, right? There's almost $400 million of additional sales that is generating for you an additional $68 million of profit, bringing your gross profit to 351 for the quarter, 351.23. What does that mean for cost of sales? AH12 minus AH17. Give it to me in a dollar. So top line increasing by about 400, costs increasing by about 300 for about $100 gross profit improvement. It's going to bring down that gross margin number on the total, but it's just because a higher portion of the sales is coming from new hardware, and then a huge increase in their sales is coming from Power Packs, which we're assuming has much lower margins. Um, that brings the gross margin percentage to 26.11, and the operating income, take the gross profit, net out the SG&A, and then net out like $5 million of tax, whatever you want to call it. And we are looking at an operating income in Q3 of about 142 million, or I guess I should take the tax out of the bottom line, the net income. So then we got, boom, operating plus interest and gains minus some tax money, net income of $224 million in Q3 alone. Craziness. Craziness. Just craziness. Man. So I mentioned in this true cash floor video how I think in the rest of 2025 they will make 350 million from operations. And in this comment, Active Rehab was like, how are you getting 350 in operation just from the rest of 2025? Shouldn't it be 350 as a whole? It sounds like we're saying the same thing. About 150 in earnings in Q3. Oh, he's saying including interest income. So he's saying, don't you think GameStop's going to make around $350 million total for the rest of this year? Interest and gains and income from operations put together, which is a great comment. I appreciate the thoughts. Don't you think they'll make about 150 total in Q3 and about 200 total in Q4? I'm saying, no, they're going to make 225 in Q3. They're making 225 million in Q3. And then whatever the rest of that number is, right? 550 minus 225. And then, so about 325 in Q4, right? We'll get into more granular projections as it gets closer and as we have the Q3 numbers. But it's just crazy that, I'm saying, hey, they're about to make a ton of money, and you look at it at face value and it's like, how can that be? How can you say that in 6 months they're going to make $550 million and their entire float's 447? You're telling me they're going to make another $1.20 per share worth of just cash in 6 months? Isn't that too good to be true? And it's like, well, no, right? If you understand what GameStop has communicated related to their collectibles, which is that for the full year, they're going to be just about a third of total sales. And then historically, right, what type of growth curve and margin curve to expect on new console cycles. Then with a decent level of clarity what their hardware and software sales are going to be for the rest of this year, which means you then know with a pretty decent amount of clarity what their total collectibles is going to be. And we're getting as conservative as possible, right? We're saying 9% margins on their hardware. What if it is 11%? Right? We're saying 10% margins on power packs. What if it is 20%? Right? These numbers could be absolutely bonanzas. We'll see, right? We'll see as the quarters come in what type of margin they're really getting. But of course, the bearish headline is, look, gross margins coming down, right? And the real story is, look, collectibles just doubled in a single quarter, right? And they're getting $20 million of basically cost free, like SG&A free, like pure profit on every quarter, right? They're talking about another $100 million of profit a year that's about to come from power packs alone for a company that a couple years ago didn't make any money, right? No money, operating income. And you're telling me that they just found a way to make $100 million of operating income just from one of their sub categories, sub products within a sub line within their total retail business? It's amazing. It's amazing the type of numbers that GameStop's about to do. Hopefully you're excited for it. Hey, pretty nerdy video for you here on a Saturday. If you learn anything, let me know. If you disagree with anything, let me know. We'd love to hear you in the comments. But check this out, guys. SG&A as a percentage of sales cratering, right? Down by more than half in just 2 quarters, right? Their top line is going bonanzas and they're comfortable with a gross margin compression because the income, right? The operating income is skyrocketing. Let's not get obsessed with 34% on a $700 million business when we could be getting 26% on a $1.4 billion business, right? And it's probably going to continue to compress for quarters to come because their power packs is skyrocketing that much. And we're just at the beginning of this console cycle, right? The Switch just came out in Q2. And as far as a growth curve for a console cycle, check this out. Year one, year two, year three, year four. Year four is the peak of the console cycle. Like that's when the most units are sold. So if you think GameStop's exciting now, like, oh, is this really sustainable? Their hardware going from 345 to 592. It's like, oh, it's it's cyclical, but yeah, it's more it's more than sustainable. It's going to keep going up for a year and another year and another year and another year. And guess what kicks in year two and three of this Switch 2? The new Xbox and the new PlayStation, which won't sell as much as the Switch 2, but still then begin their own arcs of 4 year um, explosions and then a really strong year five, anyways. And then when you're 5 years out into the future, I mean, how big is the Power Packs business at that point? And how close are we to the next console cycle? You know? So top line growth for quarters on quarters on quarters ahead for GameStop and margins potentially compressing, but operating income exploding. And ultimately, that's what you want to see, right? Is a business that makes a lot of money, is a business that has a ton of cash in the bank, that makes a ton of money with that cash, that makes even that much more money as a business. Really excited to think about a business that's going to do what? Potentially 325 in Q4. And at that point, they're trailing PE or their trailing income will be just about $800 million, right? Clear of 750 million for net income for 2025. Insane. Insane. For a company right now that net of the cash you can buy for $391,000. You know? Sorry, $1 million. Still, you can buy this for less than 1 year's earnings, right? This PE is based on a trailing earnings of 250. If we say that in 2 quarters, which is actually just 4 months, because we're already almost at the end of Q3, if we call this 750, and let's say hypothetically GameStop doesn't move between now and then, you're looking at a PE of 0.52. If it trades where it is right now, 6 months from now, in light of these numbers that are about to come out, and how long do you think they can sustain that? I mean, it's just crazy. They will also be below the cash floor at that point. Because what I haven't talked about yet, and what I'm going to talk about is, well, what do these numbers for the income statement, what do those mean for the balance sheet, right? All right, I need to stop talking. That's all I got for y'all today. I will see you in the next one.